India's economy is a powerful machine, and its services sector is the engine driving it forward. From the heart of Mumbai to the tech corridors of Bengaluru, the pulse of progress beats strongest in the offices, banks, and hospitals that keep the nation moving. This sector, spanning banking, software, tourism, and healthcare, is the largest contributor to India's GDP and a major employer. It touches nearly every aspect of daily life, powering not just businesses, but also the dreams and aspirations of millions of Indians. When services thrive, incomes rise, jobs are created, and economic confidence grows. Families see new opportunities, young graduates find their first jobs, and entrepreneurs are inspired to innovate and expand. At the start of 2026, the sector rebounded sharply after a brief slowdown, signaling renewed strength. Headlines across the country highlighted this turnaround, and the stock markets responded with enthusiasm. January's surge isn't just a statistic. It means more projects, more transactions, and a wave of optimism among business leaders. New deals are being signed, construction sites are buzzing, and companies are hiring again. A thriving services sector attracts investment, boosts competitiveness, and raises living standards. It brings global attention to India, drawing in investors and creating a ripple effect that benefits communities across the nation. This growth sets a promising tone for the fiscal quarter, showing India's economic engine firing on all cylinders. The momentum is visible everywhere, from the rush of commuters to the hum of industry and the energy of new ventures. Next, we'll break down the numbers, spotlight leading industries, and explore what's fueling this expansion. Join us as we dive deeper into the forces driving India's remarkable economic revival. To measure the momentum of an economy, economists turn to a powerful tool, the Purchasing Managers' Index, or PMI. This index acts as a monthly health check, offering a real-time pulse on how the economy is performing. It's not just a number, it's a window into the confidence and activity levels of businesses across the country, helping experts and decision-makers understand whether the economic engine is revving up or slowing down. The PMI is built from surveys sent to business managers, who are asked about new orders, production output, hiring trends, and even supplier delivery times. Their responses are carefully compiled into a single, easy-to-read number that summarizes the overall direction of business activity. A reading above 50 signals expansion, meaning businesses are growing and demand is rising. If the number falls below 50, it points to contraction, suggesting a slowdown in activity. In January 2026, the HSBC India Services PMI surged to 58.5, up from 58.0 in December. This is a robust figure, and it's not just a small uptick, it's a clear sign that the services sector is experiencing rapid and sustained growth. This sharp increase reverses the slight slowdown seen at the end of last year, signaling that the sector has regained its momentum and is now powering ahead with renewed energy and confidence. A PMI of 58.5 means that businesses are not only winning new contracts, but are also ramping up their output, hiring more staff, and making plans for future expansion. It reflects a climate where optimism is high and companies are eager to invest in growth. For investors and policymakers, this strong PMI reading is a clear and positive signal. It tells them that India's services sector is not just recovering, but is firmly on a path of robust and sustainable growth, making the country an attractive destination for investment. The PMI offers a reliable, up-to-date snapshot of economic health, guiding crucial decisions on where to allocate resources, how to shape policy, and when to invest. January's reading is more than just a statistic. It's a declaration of economic optimism and a testament to the resilience and dynamism of India's services sector. The sector isn't just stable, it's thriving, setting the stage for continued progress and prosperity in the months ahead. What powered this surge in the services sector? The answer lies in a remarkable uptick in new business activity, which acted as a catalyst for growth across the industry. Companies throughout the sector experienced the fastest growth in new orders in 2 months, a clear sign of a strong and broad-based recovery from last year's slowdown. This surge wasn't limited to just a few firms. It was felt across a wide range of service providers, from finance and consulting to IT and retail. Robust domestic demand played a crucial role, as Indian consumers and businesses showed renewed confidence and spent freely. The appetite for services, from shopping and entertainment to professional support, grew rapidly, fueling further expansion. Many firms responded by investing heavily in technology, adopting digital tools and automation to boost efficiency, streamline operations, and expand their reach to new markets and customers. This tech-driven edge allowed companies to win more clients, handle greater workloads, and deliver better services. It also enabled them to adapt quickly to changing market needs and stay ahead of the competition. The result was a virtuous cycle. Strong demand encouraged more investment, which in turn attracted even more business and talent into the sector, creating momentum for sustained growth. January's impressive growth was no accident. It was the outcome of strategic decisions, bold investments, and a renewed sense of optimism among business leaders and employees alike. Service providers launched innovative marketing campaigns, improved their day-to-day operations, and leveraged the latest technology to stay ahead of the curve and meet rising expectations. Ultimately, the synergy between expanding market opportunities and proactive, forward-thinking strategies fueled this impressive rebound, setting the stage for continued growth in the months ahead. Not all services grew equally. Finance and insurance led the way. Banks, insurers, and investment firms saw the fastest expansion in business activity and new orders. Their performance was crucial to the strong PMI, reflecting their central role in the economy. This sector's growth signals high investment and consumer confidence, both vital for sustained expansion. While growth was slightly slower than December's record pace, it still outperformed all other service industries. The surge in financial services points to a modernizing, confident India with a growing middle class. As finance and insurance thrive, they fuel the entire economic machine. The rebound wasn't just domestic. International demand played a big part. January saw a solid rise in export business, reaching a 3-month high. Indian firms secured new contracts from across Asia and Africa, including Indonesia, Kenya, Malaysia, and Vietnam. This global reach shows Indian services are competitive and in demand worldwide. Expanding into new markets diversifies revenue and strengthens resilience. Export success brings in foreign currency, creates high-value jobs, and boosts India's global standing. International demand provided a crucial lift to new orders and activity. India's ability to win abroad is now a key engine of growth. With business booming, did jobs follow? The answer, cautiously, yes. Some companies resumed hiring in January, but overall, job growth was modest. Most firms managed increased demand with existing staff, focusing on efficiency rather than rapid expansion. This cautious approach is typical early in a rebound. Companies want sustained growth before major hiring. Still, business confidence hit a 3-month high, hinting at more robust recruitment ahead. As optimism grows and demand stays strong, job creation is likely to accelerate. For now, stability and efficiency are the watchwords. Growth brings challenges, chief among them, rising costs. In January, input prices for Indian service firms rose at their fastest pace in 4 months, affecting everything from food to electronics. This broad-based inflation pressures profits and forces tough decisions. While the rate of increase was notable, it remained moderate by historical standards. Companies must now choose absorb higher costs or pass them on to customers. The balancing act between cost management and competitiveness is more important than ever. To offset rising costs, many service providers raised their prices in January. Output charge inflation hit a 3-month high, but increases were measured, not excessive. Strong demand gave companies the confidence to adjust prices without losing customers. This restraint helps keep overall inflation in check and maintains customer loyalty. Policymakers watch this dynamic closely, as runaway price hikes could trigger interest rate increases. For now, both input and output price rises remain moderate. So Bratre Palm growth. Service providers are carefully balancing profitability with market realities. Experts see January's surge as a sign of lasting momentum for India's economy. The combination of strong services and manufacturing PMIs points to broad-based private sector growth. Business confidence is high, driven by new clients, effective marketing, and greater efficiency. Inflation, while rising, remains manageable, giving the Reserve Bank of India room to support growth. The outlook continued expansion, with the services sector leading the way. Challenges remain, costs and job creation. But the overall picture is bright. India's services sector is poised to drive prosperity and strengthen its global position. The economic engine is roaring, and the road ahead looks promising.